Welcome back. You're watching Market Fatafat on ET now. Before we get started again with all the stocks that are buzzing in trade, let's shift focus a bit to some of the important updates that are coming in. And the next GFC Council meeting is scheduled on June 22nd. This is the 53rd meeting. Remember, the last one was held in October last year when the council levied 28% on online gaming, horse racing and casino. What is on the agenda this time? Let's go across to Sumit, who's joining in with us with all these details. Sumit, what should we be expecting this time now?
Well, yes, the meeting is happening on 22nd of this month, which is next Saturday. Big issues would be rate rationalization. Items or agendas still not been floated yet. However, compliance issues will also be there. One issue of lower taxation of hybrid cars may not be considered there as well. So many other rate rationalization issues could be there. That is one likely possibility that can happen. Well, last October GST council meeting happened that last time, and 28% levy on online games, casino, horse racing was levied. That was the time it happened. And this is going to be the first such meeting after the Lok Sabha elections have gotten over, and under the chairpersonship of Finance Minister Nirmala Sitharaman, it's happening once again. So big issue is rate rationalization. Agenda still to be floated. That is to be seen what main minor item are going to be there.
All right, moving on and getting started with all the stocks yet again. Then we are joined by Vinay Rajani, who's the CMTA Senior Technical and Derivatives Analyst, HDFC Bank. And of course, we have our researchers, Gaurav and Jinay, joining us yet again. But coming to you first, Vinay, you've picked out HCL Tech for us. If you look at the last 6 months, the stock hasn't really moved much. It is only, from the month of June that it started moving up. Tell us, what is the upside that you're seeing for HCL Tech?
Yeah, so IT sector actually has started performing, though for last 2 days we have seen that it has found some selling pressure at the higher level, but overall if you were to look at the IT index looks promising on the charts, and it looks like that overall it should perform well if you take a positional view. So HCL Tech is one of the stock which actually surpassed its 50 and 200 days EMA recently and is sustaining above that. Though there has not been a big move in last 3 sessions, but the positional trend is up, and according to us 1400 is a crucial support for the counter, so that should be the stop loss for the traders. But for the investors also and for the positional traders, I would recommend that the long position should be held. And the overall, I feel that 1400 is the short-term support. Positional support is there at 1370, which happens to be the 200 days EMA. So these are the two supports for the HCL Tech. I am expecting that this counter should do well. Immediate resistance is there around 1500, which happens to be the previous high. So 1500 is the first target on the upside. If it sustains above 1500, then we can expect a target of 1560 also. So I am positive and optimistic on this counter. So this can extend its move, and the positional trend of the HCL Tech looks very much promising.
Surely keeping an eye out on that. Let's move on and put up the next stock. That is Nykaa. That's in focus. Now, Nykaa is seeing a bit of a fall, though they met with some of the analysts, and that's why we have brokerage notes from Jefferies as well as Morgan Stanley. What Jefferies is highlighting, they're maintaining a buy rating, target price of 220 rupees per share. BPC segment they highlighted has seen a good growth and significant headroom for growth going forward. Furthermore, they're saying that there is an increasing awareness in terms of the use for the category that could drive the growth, and fashion is still quite a niche play for the company, though they're expecting that in the short term maybe the BPC margins could remain in the range, and because the growth is the priority for the company. Morgan Stanley also continues to maintain its overweight rating. Newer personal care segment categories like serum and sunscreen they highlighted is doing well and is growing almost at 100%. Home brands are at the peak and would contribute to 15 to 20% in terms of the gross merchandise value, and quick commerce that would not be able to keep up much inventory. Company is working on reducing the delivery times here on the quick commerce side, given that the competition of new beauty brands is much higher, and that's increasing. So let's keep an eye on Nykaa today, but subdued in trade, down almost 1.5% in trade.
Absolutely. That's Nykaa, keeping an eye out on that. But Gaurav, coming to you then, L&T is what you've picked out for us. Tell us, why is the stock moving? I believe there's a brokerage note that has come out on it. Tell us, why is this share trading with gains of 1.8%?
Well, yes. If we talk about L&T, once again, there are two two triggers that are actually moving the stock today. The first one, let's talk about the order win. Company has actually won an order from ONGC worth 2,500 crores to 5,000 crore rupees. They actually categorize this order as a large order. What they have won is that the EPC project for commissioning 4 wellhead platforms, 140 kilometers pipeline, and topside modification for ONGC. And apart from that, there is another news that Goldman Sachs has actually now maintained buy rating with a target price of 3,600 rupees. And the reason being that company has actually reiterated their confidence to meet the 10% growth on a YY basis in terms of order inflow for FY25. If we talk about order prospect, that has also been very strong in terms of hydrocarbon and infrastructure segments. If we talk about some order momentum, now the management is expecting order momentum to pick up from here on. And lastly, they are also expecting margins to be relatively subdued for FY25, but they may actually improve when we talk about FY26. And on the back of this news, if you look at stock, that has gone up almost by 2%. So definitely watching out on L&T.
Okay, surely keeping an eye out on L&T, but let's move on to a name coming in from the IT side, and we have Birlasoft that you picked out for us, Vinay. When you're looking at it in terms of Birlasoft, it was one of those companies, which overall the IT has not done much. In the last 6 months also, when you're looking at it, Birlasoft also just 2% gains. But before that, when even IT was not performing for the last 1 year, Birlasoft saw a run-up before this 6 months. So what is the view that you have now on Birlasoft?
Yeah, so as you said, it is one of the good company in the IT space and IT index. If you were to talk about IT index, is still placed 10% below par from the all-time high level. So IT is the only sector which has not participated in this bullish trend. So I am expecting that IT should do well, and along with the HCL Tech, Birlasoft is also placed better on the chart. So it looks very strong setup, and it is a textbook, we can say, a flag pattern breakout on the daily chart. So with the volume, it has risen 3% today. Today's volume is almost double than the last 3 days volume. So quite convincing setup technically, and recently along with the IT, other major IT stocks, it also bounced back sharply from the lower level, and now today it is also outperforming. So it looks very promising on the charts. It may take 1 or 2 days more to give momentum back into the counter, but overall positional trend, as I said, for the HCL Tech, for Birlasoft also, I am bullish, and this can extend the rally. As far as support is concerned, I see a strong support placed at 660 for the Birlasoft, and on the upside, I see a resistance is around 750 odd level. So we can keep a target of 750 for the short term for next 2 to 3 weeks, and 660 is the short term support where we can, as a trader, keep a stop loss.
All right, Jinay, coming to you. You've picked out Emphasis for us. Tell us what's the news flow on this one.
FTSE will be increasing its weight on Emphasis today, and this is actually because of the block deal which happened a couple of days ago. Because of the block deal, the free float of the company has actually increased, and according to Nuvama Alternative, this will result into an influx of close to $30 to $32 million today in FTSE index, which equates to about approximately 1.1 million shares. Now, if you look at these volumes, it is equivalent of about 2 days of trading volume if you exclude the volumes of that specific day when the block deal had taken place. So lots of volume coming in this, and also additionally MSCI will be also looking to increase its float into this company in next coming few days. So which can again potentially lead to an influx of about $50 to $55 million in coming some days.
All right, moving on then. Arvind Limited is another stock that is in focus today. In fact, it was trading with gains of over 2% in the morning, has cooled off from those highs, and is currently trading with gains of 0.8%. And it's on the fact that, there's an update on the illegal strike that was going on at their Santej plant of the company. The strike has been called off by the workers, and the operations of the company at Santej plant, which were partially impacted, due to the strike, are now getting back to normalcy. Also, the company has estimated a potential loss of revenue, and that is likely to be around 180 to 200 crores, Vinny, and a reduction in EBITDA also of around 60 to 65 crores is what the company is saying. On the back of that, Arvind Limited is in focus today.
Surely keeping an eye out on that. Maybe some bit of an impact, like Ankita is highlighting, also is what one could watch out for there. But let's move on to the next stock, and Natco Pharma. Vinay, that's the one you picked out for us. What is Natco Pharma looking like on the technicals, and what is the level that you're keeping an eye out on?
Yeah, so recently Natco Pharma has surpassed the crucial resistance of 1100. Basically, there was a long consolidation so there was a multi-week consolidation, and during this consolidation, we witnessed that this stock was not crossing 1100, but now it is trading above that level. Right now, the current level is 1170. So clear-cut breakout is there on the positional chart. Weekly and monthly charts are looking very convincing. Indicator oscillators that we have been tracking for this counter is looking strong on, and it is expected that this rally should continue. So from this level, I see the previous resistance of 1100 will act as a support now going forward. So 1100 should be the stop loss in long positions, and I'm expecting that that should be kept with a trailing basis. And as we see stock rising from here, we can trail our stop loss. That's the best strategy we can adopt in this kind of setup because it is trading at its all-time high. So looks very convincing on a medium to long-term charts. 1100 is a very strong support that should be kept as a trading stop loss, and it should be trailed on as and when we see a rise in the counter.
All right, with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we're getting you more stocks.
Welcome back. You're watching Market Fatafat on ET now, and let's keep it going with those buzzing stocks. KOCL, that's the one in focus, saw a jump up of almost 10 to 11% intraday in trade right now, also around that 11% mark. Now, why is that so? Now, according to reports, what we understand is that the newly appointed Union Steel and Heavy Industry Minister HD Kumaraswamy on Wednesday has signed the first official file of the ministry approving Kundramukh Iron Ore Company, that's KIOCL. That's the first time I have actually learned the full form because I'm so used to saying KIOCL. Yes, that's going to be operationalize the Devadri Iron Ore Mine, and that is the reason that we are saying KIOCL in focus, because that approval for the mine is operational approval for the mine is coming, and that is what is keeping the stock in focus up almost 11% in trade.
Absolutely, trading with gains of 10% there. Coming to you, Gaurav, IIFL Finance is what you've picked out for us. Note coming in by Jeffries. Take us through the details on the note.
Well, yes. When we talk about IIFL, we all know that there were some curbs on the gold loan segment, and then the RBI actually took a special audit on IIFL Finance, and now the audit has been concluded. Now what has happened is that this audit actually concluded sooner than the Wall Street was expecting, and on back of this news, now Jeffries has maintained hold rating with a target price of 465 rupees. But what they view is that this actually, again, they also believe that this audit was concluded sooner than expected. There is a probability of earlier solution of the ban, which has increased for IIFL Finance, and on back of this news, there are some positive triggers which could work for the stock. What they are also believing is that the stock will take some time to rebuild after the ban is lifted, and on back of this news, now they are estimating muted FY24 to FY26 CAGR growth and ROE somewhere around 13 to 14%. But what they believe is that the downside risk is now limited, and on back of this news, we will definitely watch out for IIFL Finance. So in the morning, it opened with some positive gains, but as of now, the stock has gone down almost by 0.3%. But definitely watching out on what happens in IIFL Finance in coming days.
Surely keeping an eye out on that. Let's move on to the next one, and coming from the FMCG side, Vinay, you picked out Emami for us. What are the charts looking like for Emami? We've just seen a spike up coming in the last 1-2 months that we could see for the FMCG side. What's the word for Emami?
Yeah, so Emami is the strongest technical setup we can say from the FMCG space. In the March, it was trading around 430, and from that level, it has come up to 760 odd levels. So spectacular rally has been registered by the stock, and stock has taken out the strong resistance of 580 level 600. There was a multiple top resistance of 600 that has been taken out, and the stock is sustaining above that. So there is a long-term breakout on the chart, and I'm expecting that this will continue to outperform the FMCG space as well as the broader market. So the technical setup is quite convincing. For last 3-4 sessions, there has not been that movement because right now the stock is into a consolidation, or we can say running correction, but the primary trend of the stock is quite bullish, and on dips one can add the stock for positional trades. So that's a quite convincing setup for the positional trader as well as the investor. So for short term, I am not recommending, but at lower level, definitely one can look at it. One can also look at this stock around 650 to 670 is the range to take a fresh long positions. And ultimately, this will continue to outperform, and we can even see a target of 800 in the coming time. So positional trend is bullish. If you are taking 1 to 2 month view, then definitely this stock is looking quite convincing. And on dips, one can definitely add. So 650 to 670 is the range. One can initiate a fresh long position in the stock like Emami.
All right, coming to you, Vinay, then picked out Varun Beverages for us. In fact, there's a note that Morgan Stanley came out with in the morning. Tell us what is the note saying and what is the movement of the stock?
Well, as Morgan Stanley has come up with an overweight rating with the stock with a target price of rupees 1001 as a target price. Now, what they say that for the near term, the company will be demanding due to the heat wave seen across geographies, and in medium term, the company is telling that they will be focusing on driving volumes and maintaining their margins. Also, the company says that they see opportunity to scale up the food business in Africa, so that's something you need to keep an eye on. Now, also on front of equity raising, the company said that there are no further plans as of now to raise any equities as such.
Okay, keeping an eye out on Varun Beverages, but let's move on to the next one. Oh, okay, Ankita, I think it's you who's picked out the next couple of stocks.
Yes, so Whirlpool is the counter that I picked out. Well, Whirlpool, the two companies, with Hindustan, company has announced a new marketing alliance with Surf Excel. They both have announced, it together. And, according to the alliance, both the brands will have joint marketing initiatives going forward. And you can see, Whirlpool and currently actually HUL is trading with cuts of 1.5%. And Whirlpool was trading with gains in the morning, has cooled off those gains and is now trading with gains of only 0.3%. But it's a joint, commissioning of the marketing initiatives going forward, and you'll be tracking that closely because
Absolutely.
you're tracking FMCG.
Yes, so both of them surely are to watch out for.
Absolutely. So keeping an eye out on both these counters.
Let's move on to the next one. From the chemical side, Vinay, you picked out Navin Fluorine for us. What are the charts now indicating for Navin Fluorine? Because last 6 months, quite a subduedness and consolidation, maybe you could say, that came in for the stock.
Yeah, so chemical as a sector, I think it is bottomed out technically because there has been a kind of underperformance for last many months, and now stock as well as the sector both are coming out from the downtrend, and it gradually they are surpassing the resistances which was there. And recently, if we talk about today's movement, Navin Fluorine has taken out the 200 days exponential moving average today, which was placed at 3530 odd level. So that's a good sign, I think. And chemical as a sector, not only the Navin Fluorine, but if we look at the SRF, Deepak Fertilizer, these all chemical stocks are performing very well, and they have started performing outperforming from here. So I think this rally should continue. This is not a pullback, but I believe that this is a reversal, bullish reversal, and 3300 is the 3500 was the resistance, which is also taken out in the counter. So definitely setup looks quite convincing. The immediate resistance I see for the counter is around 3700. As far as short-term support is concerned, I think there is a strong support around 3490 to 3500 that can be utilized as a keeping a stop loss of that level. So 3490 is a strong support for the traders. 3700 is the immediate resistance I see for the Navin Fluorine. But in all, I see a reversal, a good reversal, sustainable uptrend in the chemical as well as a stock like Navin Fluorine from the tech space.
Okay, surely keeping an eye out on Navin Fluorine, but let's move on, talk about the sugar stocks. So we have Sri Renuka Sugar, Birlasoft Chini and other sugar stocks as well, which are in focus, buzzing away in trade. Now, what we understand from agencies is that the government is mulling raising the 2024-2025 season sugar minimum sales price, that's the MSP. So a hike that is expected there. The hike in sugar MSP is to be reasonable and below the mill's demand. Alert, let's not forget that what is happening is that the mills seek around rupees 41 per kg as the MSP for sugars, and let's not forget the current minimum selling price is at rupees 31 per kg. Also, we had all those commentary that came in on ethanol blending as well. So keeping all this in mind, we are seeing sugar stocks, seeing a bit of a run up coming in. Not a bit, a lot of run up coming in there. But Sri Renuka Sugar or Balrampur Chini, both of them in focus.
But absolutely, very like you mentioned, the comments coming in from Hardeep Singh Puri on ethanol blending and all the sugar stocks in focus today. In fact, Vinay has also picked out Balrampur Chini for us. Sugar stocks, sugar pack is clearly in focus. Tell us, what are you penciling in on the charts for Balrampur Chini?
Yeah, so stock is up by 9% in week till date, and this is the stock which has actually taken lead in the sugar space. And before 2 days, nothing was moving as far as mid mid-cap sugar stocks were concerned, but Balrampur Chini was the stock which was actually outperforming and started the outperforming the other sectors. So this is looking very strong on the chart, and the previous resistance was placed at 410. Now it is expected to interchange its role as a support. So 410 becomes the strong base for the counter that can be utilized to keep as a stop loss, and on the upside I see a resistance which is placed around 485. So next 2 to 3 weeks would be a bullish for the counter, at least I see, because after a long time we have seen a bullish reversal in the sugar sector, and Balrampur Chini actually leading from the front and heading for the upward target. So 485 is the immediate target I can see for next 1 or 2 months, and 410, which I said was the previous top, can be utilized as a stop loss in the long position.
Okay, keep an eye out on those levels over there for Balrampur Chini Mills. But that was the last stock for today. So thank you so much, Vinay, Ashish, Jinay, as well as Gaurav for joining in with us this afternoon and taking our viewers through all the stocks that have been buzzing in trade on the back of news flows and technicals. With that, we are absolutely out of time on this edition of Market Fatafat. But do not forget, here's a programming note for you all. ET Now is celebrating its 15th anniversary with a landmark event. Now, ET Now Leadership Dialogues from a keynote address by the RBI Governor Shaktikanta Das to fireside chats with KK Mistry, Dinesh Kumar Khara, Ashish Kumar Chauhan, Utpal Sheth and Manish Chokhani. It will be an event you cannot miss. Also, we have Indian Hotels Puneet Chatwal, Tata Consumer Sunil D'Souza, who will also join us to discuss the future of hospitality and consumption, followed by an inspirational talk by Gaurang Das that will provide invaluable life lessons. So stay tuned in to ET Now on the 18th of June, that's next Tuesday, and join us in our celebrations.
If you like this video, then like, share and subscribe to ET Now.